Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine the sheer computational horsepower needed for this AI revolution. I mean, it's staggering, right?
It really is.
It's not just about software anymore. It's physical. It's these massive factories where AI actually learns, where it thinks, where it thrives.
The physical infrastructure.
We're talking colossal energy demands, advanced cooling, like stuff we haven't really seen at this scale before, and real estate that's purpose-built for these huge digital loads.
Yeah, absolutely purpose-built.
And right there, smack in the middle of all this electrifying change, there's this company, Applied Digital Corporation, making a huge bet. They want to be the essential landlord for these digital titans.
Betting the farm on being the foundation.
So today, that's what we're doing. We're going to really unpack Applied Digital, assess its potential. Could it become a truly dominant player in this critical AI infrastructure space for the long haul?
Right, looking beyond the hype cycle.
Exactly. This isn't just a quick look. It's about cutting through all the noise, getting to what genuinely matters for your investment decisions.
What actually moves the needle?
We'll dig into the leadership, the visionaries driving this, their incredibly unique business model, how they're building these competitive advantages.
Moat.
Yeah, the moat. And their financials, where they stand right now. And crucially, the insights you need to understand where Applied Digital really fits in this super fast-paced industry. So get ready.
It's definitely an exciting time in tech. I mean, so much buzz, understandably, is around the AI models themselves, the breakthroughs there.
Right, the LLMs, the generative stuff.
But understanding that foundational layer, the physical infrastructure that holds it all up, that's absolutely paramount.
You can't have one without the other.
Exactly. Without the computational power, these brilliant models are just, well, ideas on paper. Applied Digital is planting its flag right in that crucial space.
Yeah.
They're providing the backbone for AI's future. It's a fundamental play.
Absolutely. So let's start right there with the architects, the leadership team. At the top, Wes Cummins, CEO. But I'd say more than just CEO, right? He's like the strategic mastermind, the crystal ball gazer who saw this AI wave coming before almost anyone else.
Yeah, you really hit on something critical there.
He pivoted the whole company.
He did. And his background isn't typical operations. He spent, over 20 years as a tech investor, a VC? That gives him a unique lens.
Totally different perspective.
Right. He's not just climbing the corporate ladder. He's been identifying macro trends, seeing where things are going, and, crucially, figuring out how to allocate capital to capture that long-term value.
Thinking like an owner from day one.
Precisely. That decision to shift Applied Digital away from crypto mining, which was its past life, toward building purpose-built AI infrastructure. That wasn't just a whim. It was calculated, prescient, really. He perfectly aligned them with this explosion in generative AI demand we're seeing. It says a lot about his foresight. And, he's got other things going on, too, like 272 Capital LP, his investment firm, board seats. He's deeply embedded in tech investing.
So it's not just Applied Digital.
Right. The key takeaway for you, the listener, is that a founder-led company, especially with someone like Cummins, who thinks like a capital allocator, can be this powerful engine for growth. Their vision is tied to long-term shareholder value because, their skin's in the game. They see the bigger picture.
That investor perspective, yeah, especially from a co-founder, that can be a huge advantage. But even the best vision needs serious operational muscle to make it real.
Absolutely. Vision without execution is just hallucination, right?
Exactly. Which brings us to Laura Leltrello, their new COO. She came on board in January of this year. Seems like a critical hire at this exact moment. What'd you bring in?
Her arrival is, honestly, indispensable right now. Laura Leltrello has nearly 2 decades of executive experience. We're talking global giants like Honeywell, Lenovo.
Big names. Serious scale.
Serious scale. Her expertise is specifically in managing global data center operations and, maybe even more importantly for Applied Digital right now, scaling these huge, complex infrastructure projects.
Like Ellendale.
Exactly like Ellendale. When you think about their huge expansion plans, especially that massive 250-megawatt campus in North Dakota, I mean, that's like a small city of servers.
Mind-boggling scale.
Right. Her experience in operationalizing that, optimizing it, making sure these enormous complex facilities run smoothly, reliably. That's precisely what they need. She's the one making sure the lights stay on, the cooling works perfectly, the power flows 24/7. She turns the vision into high-performing, reliable physical assets.
Got it. Boots on the ground, making it happen.
But it's not just tech and ops, is it? The money side, the strategic navigating, especially dealing with governments, that's got to be vital too. Oh, absolutely critical. You need the financial fuel and the clear pathways.
So tell us about Seidel Moman, the CFO, and Nick Phillips, EVP of External Affairs.
Okay, Seidel Moment. As CFO, he's the financial maestro, conducting the orchestra of capital. His job is fiscal discipline, but also orchestrating the huge amounts of money needed for this kind of hyper growth.
Yeah, building data centers isn't cheap.
Not even close. He was instrumental in managing massive deals like that crucial $375 million they secured from Sumitomo Mitsui Banking Corporation, SMBC.
Right, you mentioned that.
These aren't small loans. These are complex, multi-million-dollar deals that directly fuel this huge capital-intensive build-out. He keeps the liquidity flowing so they can expand without, breaking the bank.
Okay, and Nick Phillips. External affairs sounds important.
Very. Nick Phillips has a background in scaling tech infrastructure too, but his really critical role now, especially for a company building massive physical stuff across states, is navigating the super complex world of government relations.
Permits, regulations, red tape.
All of it. He's been key in getting the necessary approvals for new data centers in strategic spots, like energy-rich North Dakota. That means working with local towns, state regulators, power companies, making sure land acquisition, grid connections, compliance all go smoothly.
Laying the groundwork.
Exactly. This team isn't just managing, they're actively building the foundation and navigating the tricky legal and political stuff needed for this kind of fast, large-scale growth. Digital bricks, yes, but also real ones and permits.
Okay, now rapid growth often means leadership changes, right? We saw a couple recently. David Wrench, former CFO, moved to consulting. Michael Maniscalco, former CTO, resigned, both back in January. For you, the investor, this stuff can sometimes raise a flag. How should we read these moves?
That's a really sharp question, and yeah, investors should definitely look at these things closely. Any leadership change, especially CFO and CTO, can potentially cause disruption. But Applied Digital seems to be handling this proactively, strategically even. They redistributed responsibilities quickly to keep things running, and importantly, they're actively searching for a new CTO. That suggests adaptability, not panic.
Optimizing for the next stage.
I think so. It's about getting the team right for the next phase of growth, which looks very different from where they were even a year ago.
So what would the ideal new CTO bring? What skills are crucial now?
Well, ideally, you'd want someone with deep, cutting-edge expertise in, say, next-gen AI architecture. Advanced cooling is huge, maybe liquid immersion, direct-to-chip stuff, and innovative energy efficiency strategies.
Because the power and cooling demands are just exploding.
Mind-bogglingly complex, yeah. This new CTO will be crucial for keeping Applied Digital's tech edge sharp, making sure their data centers stay ahead of the curve for HPC. So instead of a problem, it could actually be a strategic upgrade, bringing in fresh eyes, specialized skills tailored for the future.
Okay, that makes sense. So staying on leadership, the big question for you, the individual investor, is always, are their interests lined up with yours? What's their skin in the game?
Fundamental question, always. And for Applied Digital, the answer seems like a pretty resounding yes. Wes Cummins, CEO, co-founder, holds a really significant stake, 14.79%. That's over 23 million shares as of last August.
Wow, that's substantial.
It's huge. That's not just a signal of confidence, it's direct, tangible alignment. When a founder CEO has that much personally invested, they're in it for the long haul. Their wealth rises and falls with the stock. They're thinking sustainable long-term value.
Okay, what about the rest of the compensation?
Beyond his stake, the executive comp structure, which you can see in their 2024 proxy statement, reinforces this. Cummins' total comp was around $2.9 million salary, bonus, but a big chunk was restricted stock awards, RSUs.
The stock that vests over time.
Exactly, incentivizing long-term performance. Wrench and Maniscalco also got significant stock awards. But what's really interesting is comparing Cummins' pay to peers. His $2.9 million is actually pretty modest, way below the $7.5 million average for similar U.S. companies.
Interesting. Less focus on immediate cash.
It suggests the focus isn't just maximizing personal short-term cash, but building that enduring shareholder value.
Yeah.
Plus, they added a clawback policy in late 2023.
Meaning
They can recover incentive pay from execs if there are financial restatements due to misconduct. It's another layer of protection, accountability for shareholders. All these things aim to keep leadership rowing in the same direction as you.
It definitely sounds like they're building intentionally, not just, chasing the latest shiny object. What about their big picture, their mission, vision, the culture they're building? How does that actually play out day to day?
Their mission is super clear, very focused. To construct the epicenter of AI by designing data centers for HPC and AI, solving power and scalability challenges. It's not just jargon, it shapes everything they do.
From choosing locations to cooling tech.
Precisely. Their vision is being forward-thinking innovators, using macro trends to provide reliable, efficient, and importantly, sustainable solutions. So, day to day, that means prioritizing cutting-edge designs for HPC, actively finding locations with abundant, often renewable power, and investing heavily in advanced cooling for those next-gen chips.
And the culture.
It seems to be one of resilience, relentless innovation. They explicitly look for forward-thinking innovators, committed not just to solving hard tech problems, but also to reducing carbon footprints.
Sustainability is key then.
Hugely key. And it's not just greenwashing. It's a real strategic advantage. It aligns with the global trends, sure, but it also attracts clients who increasingly care about ESG factors, environmental, social, governance.
Right, big companies want responsible partners.
Exactly. They want their massive computing footprint powered responsibly. Applied Digital's green focus becomes a major differentiator, a business imperative. It shows a long-term view embedded in their DNA.
Okay, but every strength has potential weaknesses. Looking at leadership, what are the key risks you, the investor, should keep tabs on?
Good counterpoint. Always look at risks. The main one, especially the fast-growing, founder-led company, potential over-reliance on Wes Cummins. There isn't a clear public succession plan.
The key person risk.
Exactly. His vision's been transformative, but what if he leaves unexpectedly? Without a planned transition, that could cause significant disruption. Second, those recent leadership changes, CFO, CTO departures. While managed proactively, it's still a period of potential short-term disruption. Integrating new execs takes time, carries risk.
Need to watch that CTO search closely then.
Very closely. That hire is critical for their tech edge. And when you compare them to peers like, say, CoreWeave, whose team has ex-Google, ex-AWS folks, you could argue CoreWeave has stronger pure tech credentials from hyperscale environments.
But you said Cummins' investor background is an edge.
It is. It's a different kind of edge. Cummins' investment acumen gives Applied Digital strategic growth insight. He's playing the long game on market trends, capital allocation, partnerships. It's a different but equally valuable skill set in this capital-heavy, high-growth space. It's that balance of ops and strategy that'll define them.
That's a great look at the leadership. Okay, let's shift gears. How does Applied Digital actually make money? What are they doing in this AI revolution?
Okay, think of them as the essential factories, or maybe better, the landlords and service providers, for AI's massive compute needs.
Okay.
Their core job is building and running these highly specialized data centers, optimized from day one for AI and high-performance computing, HPC. They're not just renting out generic server space.
Not just a warehouse with racks.
No way. They provide the cutting-edge physical infrastructure and, increasingly, cloud-based computing power needed for the toughest AI jobs. They operate across three main segments.
Break those down for us.
Sure. First, data center hosting. That's leasing space, power, cooling for clients to put their own hardware in. Originally, it was heavily crypto mining, but they've made a huge strategic pivot towards higher value AI and HPC clients.
Adapting to the market.
Absolutely. Second, cloud services. That's where they offer on-demand GPU computing via their Sci computing platform. So clients can access powerful GPUs without buying all the hardware themselves. Like a specialized high-octane cloud.
Pay-as-you-go compute.
Sort of. And third, HPC hosting. This is where they design, build, and manage whole purpose-built AI-optimized data centers for clients with massive, dedicated needs, often on long contracts. This clear segmentation, the shift, shows their adaptability and focus on the highest growth parts of the AI infrastructure market.
Makes sense. Build the foundation, offer the tools, provide dedicated spaces. What specific products, and is there one deal that's a real game changer for them?
The core offerings are those three: hosting, cloud services, HPC hosting. But yes, to your second question, there is one absolutely monumental deal that fundamentally locks in their AI focus and promises incredible long-term revenue. That's the 250-megawatt lease with CoreWeave, announced June 2025.
Right, the big one.
The really big one. This deal is seismic for Applied Digital. It's expected to generate an astounding $7 billion in revenue over 15 years.
7 billion.
7 billion locked in over a decade and a half. Think about that predictability. It's not just a big contract. It fundamentally re-anchors their whole business in AI infrastructure.
Yeah.
It provides this unparalleled foundation of predictable revenue for years. It's a massive validation of their specialized infrastructure.
Huge validation. And for you, the investor, that means long-term revenue visibility. That's rare.
Extremely rare and highly valuable, especially in a volatile market. It lets them plan and build with huge confidence.
7 billion over 15 years. That's eye-popping. A clear signal of their AI commitment. But okay, there are lots of data centers out there. What makes theirs so different? What's the unique edge that commanded a deal like that?
It comes down to deep, intentional specialization. Engineering foresight. These aren't generic facilities designed for, e-commerce sites or corporate databases.
Right.
No, these are purpose-built from the ground up for the extreme, almost insatiable demands of AI and HPC. That means a few critical things. First, incredibly high power density.
AI is power hungry.
Immensely. A general data center might handle 5, maybe 10 kilowatts per rack. An AI-optimized one needs 50, 100 kilowatts, maybe even more. Apply digital designs for that from the start. Second, advanced cooling.
Got to keep those chips cool.
Exactly. Traditional air cooling just can't cope with the heat from thousands of power-hungry AI chips running flat out. Applied digital uses sophisticated liquid cooling, maybe even direct-to-chip or immersion cooling, to dissipate that heat efficiently. Keeps performance optimal, prevents throttling.
Okay, power density, cooling. What else?
Third, and this is crucial, access to cheap, renewable energy. This isn't just about being green, though that helps. It's a profound operational and financial advantage.
Energy is a huge cost.
Often the single largest expense. By getting access to low-cost wind or solar, especially in places like North Dakota, they slash their operating costs. They can offer better pricing and meet the growing demand for sustainable infrastructure.
So compare that to a standard data center.
Okay, think of a general-purpose place like Digital Realty or Equinix runs. They're like standard office buildings built for broad utility. Applied Digital, they're like a highly specialized, elite athletic training facility built exclusively for digital Olympians, the most demanding AI workloads.
Tailored infrastructure.
Exactly. That ability to meet the unique power, cooling, connectivity needs of cutting-edge AI. That's a profound differentiator. Better performance, unmatched efficiency, future-proofed environment. That's the edge.
Actions speak louder than words, right? And Applied Digital has this track record of adaptation, ambition. It hasn't been a straight line. Tell us about that journey.
It really is impressive. Adaptability, strategic foresight, the biggest example. That successful pivot. They started mainly in crypto mining. Lucrative sometimes, sure, but volatile, capital intensive.
Yeah, very cyclical.
They saw the landscape shifting. With real agility, conviction, they moved their core focus, their infrastructure, to the much more stable, rapidly growing AI and HPC sectors. That's not just surviving change. It's anti-fragility.
Getting stronger from disruption.
Exactly. They used their data center expertise to grab a new, higher value opportunity. Beyond that pivot, their journey has these major financial milestones, showing real institutional confidence. That massive $5 billion financing commitment from Macquarie Asset Management late last year, foundational capital for expansion.
Huge backing.
Then the $378 million SMBC deal we mentioned, crucial liquidity. And of course, the landmark $7 billion CoreWeave lease shows they can land cornerstone clients at the highest level.
And the operational results.
Their Q3 2025 results showed solid 22% year-over-year revenue growth. But here's where the pivot really shines in the numbers. Cloud services revenue exploded up 220% year-over-year, hitting $17.8 million, even while traditional data center hosting dipped slightly.
Wow, 220%.
It vividly shows not just a pivot, but successful execution, moving towards higher value AI services, the walk and the talk.
Fascinating. So where are these digital powerhouses actually located, and how do they manage it all? Are they building everything themselves? What's their operational approach?
Headquarters are in Dallas, Texas. The data centers themselves, the operational hubs, are strategically placed. They need ample, affordable power, sure, but crucially readily available, often renewable power.
Like Ellendale.
Ellendale, North Dakota is a prime example. Massive 250-megawatt campus. North Dakota has exceptional wind power access, ideal for sustainable, cost-effective operations. They also have facilities in Texas, other locations, chosen for similar advantages, grid capacity, fiber link.
Do they own them all? How integrated are they?
Mostly. They own and operate. Gives them huge control over quality customization. They might lease some space strategically, but ownership is key. And they're smart about vertical integration.
Medium?
Well, things like general construction, maybe some routine maintenance, might be outsourced to specialists. But they keep direct control over the really technical, specialized stuff, managing AI HPC infrastructure.
The core competencies.
Exactly. Site selection, intricate electrical and cooling design, construction supervision, day-to-day mission-critical ops that's in-house. This control ensures the infrastructure precisely meets those unique, demanding AI HPC needs. Better efficiency, performance, quality control. Essential when you're powering the world's most advanced computing. They're building a bespoke environment.
Okay, facilities are built. How do they get services to customers? And how stable is that revenue stream given how fast AI is changing?
Distribution is mostly direct to customer, especially for the big players. They deal directly with large enterprises, often locking in those substantial long-term leases like CoreWeave.
That makes sense for large deals.
Yeah. And that model, plus their growing cloud service partnerships, directly supports their scalability. By locking in big contracts up front, they get the certainty to fund and build huge new centers. Pre-selling capacity, basically. Reduces risk, ensures demand.
And predictability.
That direct, long-term contract approach is absolutely key for revenue predictability. Those multi-year leases, especially the 15-year CoreWeave one, provide this strong, stable foundation of consistent cash flow. Few companies have that.
A solid base.
An undeniable bedrock. While cloud services offer growth potential and flexibility, those long-term hosting contracts ensure financial stability, remarkable visibility into future earnings. Huge advantage for you, the investor, in a dynamic market.
But no company's an island, right? What are the storms on the horizon, the threats they need to navigate? How ready are they?
They're in an incredibly dynamic sector, so yeah, significant threats need constant watch. First, technological change. It's always looming.
AI moves fast.
Breathtakingly fast. Today's cutting edge could, theoretically, be obsolete tomorrow. A radical shift to quantum or totally different chip architectures that could alter demand. But bound to apply digital aims for future-proofing in their designs.
Okay, tech shifts. What else?
Regulatory risks. Data centers use immense energy and water. New rules on energy use, carbon emissions, water, could impact costs, operations. Broader AI regs on data privacy or compute transparency could affect client demand too.
And location risks.
Geopolitical risks, maybe more accurately regional risks since they're U.S.-based. Relying on specific regions like North Dakota means they're exposed to local policy changes, state grid stability issues, even talent pool challenges. And of course, competition. It's fierce.
The big cloud players.
Amazon Web Services, Microsoft Azure, Google Cloud, massive resources, existing clients, plus other specialized providers like CoreWeave itself, who is also a client. It's a crowded field.
So how resilient are they?
They've shown significant resilience. That anti-fragility we talked about. The pivot from crypto to AI is prime evidence. They didn't just survive, they got stronger. Their focus on renewables helps address environmental concerns and offers cost stability, aligns with client demands, and locking in those long-term contracts. That provides a substantial buffer against market shifts, builds resilience, stability. They seem designed to bend, not break.
Okay, that leads right into their competitive edge. They don't have a classic monopoly, but you hinted they have something maybe better. Explain that.
Right, not a traditional monopoly like your power company, but their hyper-specialization in AI HPC infrastructure. It creates this powerful monopolistic niche.
Not trying to be everything to everyone.
Exactly. They're intensely focused on a highly specialized, fast-growing market segment needing bespoke solutions. That creates a strong position because very few others can deliver that precise mix, extreme power density, advanced cooling, high bandwidth connectivity that top-tier AI HPC needs, especially the massive scale applied digital builds.
A specific tool for a specific demanding job.
Precisely. Few others have the specific engineering know-how, the optimized designs, the strategic resource access to compete head-on in this exact lane.
That makes sense. So let's really unpack those advantages. What fortifies their position? What's the secret sauce, the pillars of their moat?
Okay, several critical factors build that moat, making them hard to copy. First, sheer economies of scale.
Building big.
Really big. They're not just building server rooms, they're building digital cities for AI. That Ellendale campus.
Yeah.
Operating at that scale drastically cuts the cost per unit of compute. More efficient power, cooling, lower op costs per megawatt. Huge cost advantage.
Okay, scale. What's next?
Second, powerful network effects. Not like Facebook, but their strategic partnerships, especially with a leader like CoreWeave, create this virtuous cycle.
Oh, so?
Landing a top client like CoreWeave provides revenue, sure, but it's also massive validation. It attracts other big AI players who see Applied Digital can handle the toughest requirements, generates more interest, more demand. Success breeds success.
Makes sense. Fair.
Third, their strategy is counterpositioning, deliberately specializing in purpose-built AI infrastructure, not general-purpose cloud or data centers. They avoid direct, broad competition with Amazon or Microsoft.
They picked their battleground.
Exactly. Offering a tailored solution the giants often struggle to match for specific AI performance, efficiency, cost. Be the best at one high-value thing, not a jack of all trades. Fourth, significant switching costs.
Hard to leave once you're in.
Very hard. Once a big client deploys their expensive, sensitive AI hardware in Applied Digital's purpose-built setup, moving it is immensely costly, complex, involves downtime. These aren't just standard servers. And long-term leases, like that 15-year CoreWeave deal, cement those high switching costs, effectively locks customers in.
Okay. Scale, network effects, positioning, switching costs, more.
Yep. Fifth, their emerging branding as an AI infrastructure leader is growing stronger, boosted by that sustainability focus, renewable energy access. It appeals deeply to clients prioritizing responsible operations. Sixth, truly cornered resources.
The cheap renewable power again.
Yes. Strategic access, especially in places like North Dakota. Energy is a massive cost. Securing low-cost, green power is a fundamental structural advantage. Hits their bottom line, allows competitive pricing. Seventh, deep process power.
Expertise in building and running these things.
Highly specialized expertise. Designing, building, operating AI-optimized data centers. It's not off-the-shelf stuff. It's sophisticated, built on experience, unique engineering, continuous innovation in cooling, power distribution. Eighth, their proprietary technology in data center designs.
Unique blueprints.
Tailored configurations for power, cooling, rack density that offer superior performance and efficiency for AI compared to standard designs. Ninth, their timing was, frankly, impeccable.
The AI pivot.
Executed right as demand for generative AI exploded. They didn't just catch the wave, they rode the leading edge of a perfect storm. Huge head start. 10th, their speed of execution.
Building fast.
Remarkably fast. Rapidly expanding their footprint, securing huge deals like CoreWeave. Shows agility in a fast market. Building data centers this big, this quickly, it's impressive. And finally, back to sustainability. Not just ethics, a real competitive advantage. Lower long-term costs, differentiator for clients focused on ESG.
That's a lot of advantages building on each other.
It is. Now, for you, the investor, it's crucial to remember even strong moats face challenges. New entrants, tech shifts, energy policy changes could erode these over time. They need to keep innovating. But understanding these layers is key to evaluating their long-term potential.
Absolutely comprehensive. Okay, we understand their foundation, their edge. How exactly do they plan to capture this immense AI opportunity? What's the expansion blueprint?
But their growth strategy is pretty straightforward but incredibly aggressive. Matches the scale of the opportunity. First, continuous aggressive expansion, building new specialized data centers. Meticulously choosing regions with cheap, renewable power. Tapping wind, solar. Ellendale's the prime example, but they're planning more megawatts. Constantly increasing capacity for the surging demand.
Okay, build more capacity. What else?
Second, relentlessly focused on securing long-term leases with major AI players. CoreWeave is the poster child, locking in predictable revenue for years, often a decade plus.
De-risking the investment.
Profoundly. It de-risks the huge capital spend by ensuring customers for the capacity far into the future, provides stability for more expansion. Third, and this is fascinating strategically, that strategic review of their cloud services business.
Exploring a potential sale.
Actively exploring it. For you, the investor, this has multiple angles. It could inject significant capital, maybe hundreds of millions, to reinvest in core data centers. But it also signals a potential sharpening of focus.
Becoming purely a physical infrastructure provider.
Essentially, doubling down on what they do best, building the physical bedrock for AI, becoming even more specialized. It's a trade-off, diversification versus extreme focus.
Interesting move to watch. Okay, let's put some numbers on this opportunity. How big is the prize they're actually chasing?
The prize is, well, it's immense, no exaggeration. The overall AI market, projected to hit trillions by 2030. And the underlying infrastructure, data centers, power, cooling, networks, that's foundational. Non-negotiable.
The picks and shovels.
Exactly. Applied Digital, with their specialized centers, is perfectly positioned to grab a significant chunk of that foundational market. The total addressable market, the TAM, for global AI infrastructure, estimated in the hundreds of billions annually by 2030.
Wow.
And Applied Digital isn't chasing the entire data center market. They're laser-focused on the high-growth, high-value HPC and AI segments within that vast market, where their specialization really shines. It's a precision strike on the most critical, fastest-growing part of the digital economy, powering the cutting edge.
Who are their customers now, and how resilient are their operations?
Customer base is shifting dynamically. Historically, crypto miners, and still some of that. But the major shift is towards large AI firms, CoreWeave being the prime example. That diversification, moving from a volatile single industry to a broader, more stable one, is critical for long-term resilience.
And the applications they support.
It's broad and foundational. Intensive AI training needs insane compute power. AI inference deploying those models. General HPC tasks across industries, tech, healthcare, finance, research, anyone needing serious horsepower for complex algorithms, massive data sets.
And operational resilience.
Significantly enhanced by having centers in different regions like North Dakota and Texas.
Right.
Reduces reliance on one area. Mitigates localized supply chain risks, grid instability, even weather issues. It's a strategically distributed approach. Builds in redundancy, robustness.
So flash in the pan or built to last. Decades of value.
AI demand isn't a fad, not a bubble. It's a secular trend.
The fundamental shift.
Exactly. A deep, long-term shift, reshaping industries for decades, like the internet or mobile computing. It's not going away. So Applied Digital's specialized infrastructure, highly likely to stay critical. Estimates suggest maybe a 90% probability of sustained growing demand for their services over the next decade. Their business is tied to future tech progress.
Key growth drivers are clear then.
Clear and compelling. Relentless AI demand growth, their continuous data center expansion in smart locations, and success locking in those long-term contracts, providing predictable revenue. But vital for you to remember the main risks too.
Competition.
Intense competition from tech giants. Always a threat. Technological obsolescence, they have to keep innovating their designs, and potential regulatory hurdles, energy, water, data governance. Understanding both drivers and risks is paramount for you.
Okay, let's get into the hard numbers. Peel back the curtain. What do their recent financials tell us about their trajectory, their health?
Let's break down Q3 2025, that's ending Feb 28, 2025, and compare it to Q3 24. Paints a clear picture. High growth, capital-intensive phase. First, revenue. $52.9 million in Q3 25. Solid 22% increase from $40.3 million a year before. Healthy top-line growth, especially during a pivot.
Okay, revenue up. What about profit?
Net loss, $36.1 million in Q3 25. Still a loss, yes, but that's a significant improvement. A 43% reduction from the $62.8 million loss in Q3 24. Trend is definitely heading the right way.
Improvement, but still a loss. What about underlying operations?
That's where adjusted EBITDA comes in. Crucial metric, gives a clearer picture of operational efficiency, excludes non-cash stuff like depreciation. It's a pivotal positive shift. $10 million in adjusted EBITDA for Q3 25.
Compared to?
A negative $1.3 million in Q3 24. That's huge. A crucial sign their core operations are now generating positive cash flow. Improving efficiency, path towards profitability.
Okay, what about cash and debt?
Liquidity looked healthy. $261.2 million in cash end of Q3 25. Flip side, total debt was $689.1 million.
Substantial debt.
It is. And looking at segment revenue, you really see the pivot. Cloud services revenue exploded 220% year over year, jumped from $5.6 million to $17.8 million. Meanwhile, traditional data center hosting dipped slightly, 7%. Vividly shows the successful shift to higher value AI services.
Those are compelling numbers, especially the EBITDA flip and cloud services growth. But for you, the investor, what does it all really mean? How do we interpret this?
Right, translating numbers to narrative. That strong revenue growth, especially the cloud services explosion, clearly validates the AI pivot. Shows they're capturing surging demand, their purpose-built infrastructure is working. Now the net losses. Essential to understand that's typical, expected even.
For this kind of company, this phase.
Exactly. Heavy investment, rapid growth, capital-intensive industry like data centers. They're pouring money into building massive infrastructure for future revenue. The losses aren't operational failure, they're investment for future scale.
But the positive adjusted EBITDA is key.
Very positive. Very significant signal. Shows core operations before non-cash expenses like depreciation or expansion debt interest are now self-sustaining, generating cash, demonstrates improving efficiency, clear path towards overall profit as they scale.
And the debt. Nearly $700 million sounds like a lot.
It is substantial, but remember, it's backed by those big recent financings, the $375 million SMBC deal, the $5 buyer Macquarie commitment. This debt isn't distress. It's strategic, necessary fuel for massive expansion to capture the huge AI opportunity, like a mortgage on a rapidly appreciating asset.
How do they stack up financially against, say, CoreWeave?
Direct comparison is tough. CoreWeave is private.
Yeah.
But Applied Digital's revenue growth is highly competitive in the industry, and their current losses look like necessary strategic growth stage investments, not a failing model. It's investing for future scale, market leadership.
Okay, so given everything leadership, model, edge, financials, how's the market valuing Applied Digital right now? What's the street saying?
As of mid-June 2025, stock price was around $10.62, market cap about $2.4 billion. Using their estimated full-year 25 revenue, around $211.6 million, their price-to-sales ratio, PS, is roughly 11.34. Gives you a snapshot of how the market values their revenue.
And analyst targets.
The consensus average target is $12.72. High target is $18, low is $7. So a range, but on average, analysts expect upside from the current price. Suggests many on Wall Street see more growth ahead.
Every investment has its bulls and bears. Let's lay out both sides. The compelling bull case and the cautious bear case for Applied Digital.
Okay, the bull thesis. Arguments are strong, mostly driven by the macro picture. First, that undeniable, powerful tailwind of explosive AI market growth. It's a multi-trillion-dollar transformation.
Yeah.
Applied Digital sells the picks and shovels.
Foundational play.
Right. Second, that colossal $7 billion CoreWeave lease. Cannot overstate it. Incredible long-term revenue visibility, de-risks future earnings significantly, provides stability. Third, the huge $5 billion Macquarie financing commitment. Shows deep institutional confidence, provides capital fuel for expansion. And fourth, strong leadership alignment via Wes Cummins' massive stock ownership. Incentivized for long-term value. In the same boat as you, the investor.
Compelling bull points. What about the bear case?
The bear thesis also raises valid points you need to consider. Applied Digital has significant net losses currently and high debt, nearly $700 million. While common for growth companies, it's still a financial risk. Needs diligent management, especially regarding interest rates, refinancing.
Debt management is key.
Absolutely. Second, intense competition from the tech giants, Amazon, Microsoft, Google. Vast resources, existing infrastructure, established clients that can't be underestimated. Third, those recent leadership transitions, CTO, CFO departures, if not managed perfectly, could cause disruptions, loss of knowledge, strategic missteps. And finally, the stock's historical volatility.
That wide trading range.
Wide range, $2.12 to $11.62 in 52 weeks. Shows it's not for the faint of heart. Subject to big market swings, tech sector corrections. High reward, but also high risk.
So, weighing those powerful arguments, bull versus bear, where does the scale tip? What's the most probable outlook?
Weighing it all up, considering the context. The bull thesis seems more likely to prevail and drive their trajectory. The overwhelming secular demand for AI infrastructure plus Applied Digital's strategic position as a specialized provider, that's a highly compelling path.
Building the digital bedrock.
Exactly. The scale and long-term nature of the CoreWeave deal, locked in 15 years, plus robust institutional financing. That provides a strong financial foundation, mitigating many typical growth company financial concerns. And the stock, relative to analyst targets. Looks like it might be trading with a potential margin of safety for investors believing in the long-term AI trend and Applied Digital's unique spot. We estimate a strong, maybe 75% probability of them achieving and holding significant market share by 2030 in this critical AI infrastructure space. They're aiming for leadership.
Let's bring it right up to today. What's happening right now in the news cycle that investors absolutely need to know?
The very latest developments really reinforce what we've discussed, show tangible proof of their strategy accelerating. That monumental 250-megawatt CoreWeave lease, officially announced June 2025. Concrete capstone on their pivot, signal of future revenue.
Huge news. What else?
Second, they're actively exploring that potential sale of their cloud services business. More than a rumor. Signals a decisive strategic focus shift. Potentially doubling down as a pure data center provider. Could streamline things, provide capital.
Focusing the business?
Potentially.
Yeah.
And of course, the leadership changes new COO Laura Lotrello, the ongoing CTO search, actively shaping the team for the future. Shows proactive management. These aren't static times for them. Dynamic, evolving, executing their plan.
And what's the chatter like online? Social media, other investors, consensus, or chaos?
On platforms like X, investor forums, sentiment around Applied Digital is mostly positive, especially highlighting that CoreWeave deal, the analyst upgrades that followed.
People noticed the deal.
Oh yeah. There was some initial noise about CoreWeave's own stake sale. People sometimes mix things up. But analysts and seasoned investors mostly dismiss that as non-fundamental for Applied Digital itself. doesn't affect APLD's contract. The overall conversation shows growing recognition of Applied Digital's strategic importance in AI infrastructure.
So filter the noise, focus on fundamentals.
Exactly, and the market seems to be largely doing that, recognizing the core value here.
So let's wrap this up. What have we truly uncovered about Applied Digital today? We've looked at their audacious vision building AI's future infrastructure, the strategic leadership, their unique specialized model, their strong position to capitalize on explosive AI growth.
Our analysis confirms it. Applied Digital is indeed exceptionally well-positioned, poised to become a major foundational player in AI long-term. Their specialized infrastructure, those strategic partnerships like CoreWeave, the robust financing, it all underpins an optimistic outlook. They are, quite literally, building the backbone for the AI revolution.
But crucial hurdles remain. Right. Keep a close eye on intense competition, diligent debt management, and the need for continued leadership stability, especially that critical CTO search.
Absolutely. Vigilance is key.
As AI continues its astonishing march forward, needing ever more power, more precision, the company is providing its very foundation. They'll be the bedrock of this next industrial revolution. Applied Digital has laid its bricks, started building its structures. The real question for you now is whether you believe this digital infrastructure giant is building a fortress to stand the test of time, or just a really impressive house of cards in the cloud.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.